The Federal Reserve's next move is hanging in the balance, and it all hinges on one critical factor: inflation. With the economy teetering on the edge of recession, the Fed's decision to cut rates next week could be a make-or-break moment. But here's where it gets tricky. While weak labor market data suggests the need for immediate action, the economy hasn't completely unraveled yet. So, will the Fed act boldly or proceed with caution? Let's dive into the details. Last week's snapshot. Recent labor market data painted a grim picture, signaling recession risks and fueling expectations of a Fed rate cut. However, the economy isn't in freefall, giving the Fed room to avoid drastic 50 basis point cuts. Mortgage rates dipped as investors grew optimistic about potential rate cuts. But the question remains, how deep and how soon? This week's spotlight. 1. Inflation takes center stage. Producer Price Index, Wednesday, 9/10. Core PPI is projected to ease to 0.3% month over month, down from 0.9% last month. While PPI is often seen as a precursor to CPI, it's notoriously volatile and not always reliable. But here's where it gets controversial. Could this decline be a false signal, or does it truly foreshadow easing inflationary pressures? Consumer Price Index, Thursday, 9/11. Core CPI is expected to hold steady at 0.3% month over month and 3.1% year over year. Airfares, tariff-impacted goods, and car prices may push it upward, but shelter costs, a key component, are expected to remain flat. If these numbers hold, the Fed's preferred inflation gauge, core PCE, should stay elevated but stable. And this is the part most people miss. Even if inflation doesn't spike, it's still above the Fed's target, leaving policymakers in a tight spot. 2. Non-farm payrolls benchmark revisions, Tuesday, 9/9. This technical event can shake markets if revisions paint a starkly different picture of the labor market. Every February, the BLS adjusts its job estimates based on the quarterly census of employment and wages, QCEW. This week's preliminary estimate suggests up to 1 million fewer jobs created from April 2024 to March 2025. But here's the twist. The QCEW data excludes illegal immigrants, a significant contributor to job growth, and it's been consistently revised upward. So the final February revision is likely to be much smaller. Is this a case of overcorrection, or are we missing a critical piece of the puzzle? 3. University of Michigan Consumer Sentiment, Friday, 9/12. Both sentiment, 58.0, and the 5 to 10-year inflation outlook, 3.5%, are expected to remain flat. Reflecting cautious consumer confidence. Last week's key developments: labor market weakness. Job openings plunged to 7.18 million, far below expectations, and non-farm payrolls added just 22,000 jobs in August. The unemployment rate ticked up slightly, but weekly claims data suggests stability. The big question: is this slowdown a temporary blip or the start of a deeper trend? ISM Services Index. Business activity rose more than expected, driven by pre-holiday preparations and tariff concerns. But is this growth sustainable, or are businesses simply stockpiling ahead of uncertainty? Deeper dive. Jobs report Fed outlook. Investors are betting on faster, deeper rate cuts, but history shows August jobs data is often revised upward. The disconnect between falling job creation and stable unemployment rates is puzzling. Could this be due to immigration slowdowns? Or are employers hesitating to hire and fire alike? Housing market insights. Redfin's reports reveal a buyer's market in most regions, with the lowest number of home buyers since 2013, excluding the pandemic. Sellers are pulling back, but there are still 36% more sellers than buyers. Investor purchases are down, and home ownership rates have dipped for the first time since 2016. Is this the new normal, or will the market rebound? Meet the expert, Chen Zhao. Redfin's head of economics research brings a wealth of experience from J.P. Morgan Chase Institute, Analysis Group, and the U.S. Census Bureau. Her insights into housing and labor markets are invaluable for navigating today's economic landscape. Final thought. As the Fed weighs its options, the inflation data this week could be the deciding factor. But with so many variables at play, will policymakers get it right? What do you think? Is the Fed moving too slowly, or is caution the right approach? Share your thoughts below.